Hi, I'm Alex Young. I'm an account executive at Security Health Plan, and today we're going to talk about the basics of health insurance. We'll talk about the costs of going to the doctor. We'll look at the types of plans that are available to folks, whether it's through an individual policy or an employer-sponsored plan. And then we'll talk about some terms and definitions you need to be familiar with so you can judge the product you're buying. I always like starting with, what does it cost to go to the doctor? If you're young and healthy, you probably don't realize some of those costs associated with hospital bills. For instance, emergency rooms on average are about $500 per visit, and that doesn't include services for blood work, x-rays, or diagnostic testing. Walking into your regular doctor, if you have a family practitioner and have an office visit with that family practitioner, on average is going to run about $160 to $200 per visit. If you need specialized care, if you have to see a specialist, those visits can run $300 or more per visit. And of course, on top of all these charges, if you have any prescription drugs, on average you can expect to spend about $70 per prescription per month. So a huge amount of burden there. If you ever have that worst case scenario, that's why you need health insurance to protect you from these costs. Now, typically, when we think of folks who are admitted to the hospital, what is the average age group? Well, it's no surprise that the average age group is 65 years and older. However, what is surprising is the second most or highest admitted age group are the ages of 15 to 44. And as you dive into that number more, and especially looking at costs, you'll see that the folks between ages 15 and 44 cost more when they're in the hospital, mostly due to the fact because it's usually following an emergency. So again, great reasons to protect yourselves, and if you're young and healthy, insurance can be very cheap compared to these costs and burdens. One example I always give, I had a customer whose daughter had just graduated college. She got a job in another city and came off of her parents' insurance policy. She had 2 months to go before her plan through her employer kicked in. In that 2-month time frame, she decided to go without coverage. She decided to risk it. Unfortunately, one day she was walking down the sidewalk, was hit by a motorcyclist who had no insurance on his motorcycle, and of course she had no health insurance. She spent 2 weeks in intensive care in the hospital and had a bill close to $500,000. She ended up filing bankruptcy, and while she did fully recover and has no problems to this day with her health from that accident, she does have that burden of every time she applies for a loan, she's got that bankruptcy out there. So again, that's the important reason why someone young and healthy should have health insurance. Now, how do you get insurance? If there's a couple ways to do it. If you're an individual and you don't have employer-sponsored coverage, or if you're self-employed, there's a ton of individual products available that you can get on your own. If you do have an employer-sponsored plan available, you need to know a few things about that policy as well, and many of the terms and definitions that we're going to talk about in a few minutes will apply to that coverage too. But first, let's talk about that individual coverage. What you need to know is there are a couple plan types available here in central Wisconsin. And commonly, there's health maintenance organizations and PPOs. Health maintenance organizations, or HMOs, are companies that are geared towards preventive care, to making sure their customers are staying healthy or recovering following a hospital stay or surgery. They have a network of doctors that their customers need to go to in order for their care to be paid for. Typically, HMOs will cover you for emergencies anywhere in the world. Now, PPOs, or Preferred Provider Organizations, are insurance companies that have an in-network set of doctors that you need to go to for your care. However, you can also go to doctors that are not in the network, but you'll be responsible for a higher amount of out-of-pocket costs. That was a lot of health insurance language. I just used a lot of terms that are really common to my industry. I kind of forget, I have the tendency to forget that a lot of folks aren't familiar with those terms. So let's kind of define. First thing you need to know when you're shopping for health insurance: premium. That word simply means, what is the monthly charge to have an insurance policy? In order to be covered by this insurance company, what are you going to pay per month? Copays. Copays are a set amount that you pay for services. A good example would be if your plan has a $20 office visit copay, you'd pay $20 for that office visit, the insurance company would pay the rest. Deductible. Deductible simply means that's the amount you have to spend prior to the insurance company paying for your bills. Coinsurance, along the same lines, but a little bit more variable. Coinsurance is a percentage. So you pay a certain percentage and the insurance company pays the other percentage. A good example would be your plan having an 80-20 coinsurance option. That means the insurance company pays 80% of the bill and you would be left paying the other 20%. Now, another important number or another important term to be familiar with as you're looking at these benefits: out-of-pocket maximum. What is my worst case scenario? If I end up in the hospital for 2 or 3 weeks, if I have a major surgery, if I have cancer, what can I expect to spend? Many insurance companies refer to this as the out-of-pocket maximum. The out-of-pocket maximum usually is an amount, a cap on what you can spend for that deductible and coinsurance in a calendar year. Typically, they don't count the copays towards this maximum. It's usually just the deductible and coinsurance. Now, a couple other terms you need to be familiar with. Policy exclusions, probably the most important thing to look at when you're shopping for a plan. What doesn't this plan cover? It's a great question to ask when you're shopping for plans. Typically, on individual policies, you can expect maternity and oral surgery to be exclusions. There may be more, so it's an important area to look at. Something that goes hand in hand with exclusions can be pre-existing condition clauses. We always get this question: will you cover my pre-existing conditions? A pre-existing condition is anything you've seen a doctor for or been treated for in the last 15, 18 months, or possibly your entire life. Depending on the company and the plan, they might look back your whole life. Will this plan cover my pre-existing conditions, or will there be any waiting periods before the coverage kicks in for pre-existing conditions? Two very important questions to ask. Now, beyond exclusions and limitations and pre-existing conditions, you also need to be aware if there's any limitations on covered services. For instance, will my plan cover physical therapy, but will it limit it to a number of day visits? Or will it limit coverage for oral surgery? Things like that. So policy exclusions, pre-existing conditions, but on top of that, you need to be aware of limitations. Now, if you're in the individual market shopping for insurance, you need to be aware that there is a procedure called underwriting, which is the policy that you have to answer health questions, possibly supply your medical records, or even have a health exam to see if that insurance company will accept you and cover you under their policy. This underwriting process can take anywhere from 3 to 30 days, so keep that in mind. If you have a date when you know you need insurance, make sure you're doing it in plenty of time to have that new policy in force. Of course, once you have found a company, you're aware of that underwriting procedure and what it takes to apply for that company. Keep in mind to review their benefits, the exclusions, and also the limitations. Now, some folks do have employer-sponsored plans available. All of these terms and definitions we just talked about still apply. The big difference between an individual policy and a policy through your employer is the fact that under an employer plan, you don't have to go through medical underwriting. You're automatically accepted. However, there may be waiting periods and also pre-existing condition clauses. You still need to review the copays, the benefits, the deductible, the coinsurance. Be familiar with those aspects of your employer-sponsored plan. Also, employer plans may have limitations and exclusions that apply. So again, it's easier to ask permission than to beg for forgiveness, so be aware of those issues.